All right, let's talk about Mitesh Patel. Today, we're going to break down his entire trading philosophy. And this is a journey, right? It starts with those painful losses, the ones that almost every new trader goes through. And it ends with a super disciplined, powerful strategy that honestly completely changed the game for him. So let's dive in and unpack the lessons he learned the hard way, so maybe we don't have to.
So let's start with the big one, the question that's on every new trader's mind. You've seen it everywhere. In forums, in books, you've probably asked it yourself after a bad day. Why do most of us lose money when we're just starting out? It's just so common, right?
Well, if you ask Mitesh Patel, the answer isn't some complex secret formula. Nope, it's actually a story, his story. It's about a cycle that's probably going to sound really familiar. You get a few small wins, feel like you're on top of the world, and then bam, one massive loss just wipes everything out. But it's from that wreckage that a really powerful lesson comes out.
Okay, so before we get to the strategy that works, we have to talk about the trap he fell into first. This is where it all started for him, and trust me, it's a place a lot of us will probably recognize. And this chart, this pretty much sums up that frustrating cycle he was talking about. You know how it is. You make a little money on a couple of trades, you're feeling good, feeling like a genius, and then that one big trade comes along. And it doesn't just wipe out your profits, it takes a massive bite out of your actual capital. I mean, does that sound familiar to anyone? So what was his initial strategy? Well, he didn't really have one. Seriously. Back in 2007, right before the big crash, his whole approach was just follow the crowd. If everyone was buying, he'd buy. If everyone was selling, he'd sell. And look, in a bull market where everything's going up, that can feel like it's working. But we all know how that story ends, right? Yep, following the crowd works great. Right up until the moment that crowd runs straight off a cliff. And for Mitesh, the 2008 crash wasn't just some event on the news. It was his real education. This is where he paid his tuition, in the form of some really painful but really valuable lessons.
And check out this timeline. It really drives home the point that success in trading is not an overnight thing. I mean, look at this. He gets into the market in 2005. It's not until 2007 that he even starts with futures and options. Then 2010, 5 years in, before he really starts digging into charts. And it took him more than a decade to finally find his groove and master option selling in 2016. This was a long, long road.
And that road was paved with some absolutely brutal losses. He tells us one story about shorting Reliance Industries futures. He thought it was going down, but then the market just turned on him. The price just kept climbing and climbing, and with every tick up, he was getting these dreaded margin calls. He had to keep funneling money from his actual day job as an engineer just to cover the losses. Can you imagine that? Just a relentless, soul-crushing money pit. So all that pain, it led to a massive turning point, a real light bulb moment. He realized he was playing the game completely wrong. He had to stop thinking like a small retail guy and start thinking about the big shots, the ones who were actually moving the prices. And this changed everything about how he looked at a chart. You know the old way of thinking, right? You see a stock that's up a bunch and you think, oh, it's gone up too much, it's got to come down, I should sell. That was his old brain. His new brain said, wait a minute, for a stock to move up this hard, someone with a ton of money is pushing it, and they're not doing that to lose money. So maybe I should be on their side. He stopped fighting the trend and started trying to ride it.
This whole idea really clicked into place when he read this one simple rule in a book. It was just, if a stock goes up, do not sell it. And if a stock goes down, do not buy it. So simple, right? Don't fight the momentum. He combined that idea with a new obsession: volume. He started asking, why is the volume so high on this move? And those two things together, that became the foundation for everything he did from then on.
So here's the new philosophy in a nutshell. The market isn't random, it's a game. And it's being played by these massive operators, or big shots, who are moving prices to make themselves money. So your job, as a small trader, isn't to try and predict the future, it's to figure out what the big guys are doing and just tag along for the ride. Okay, so that's the big idea. But how do you actually trade that? How do you turn that philosophy into a real, concrete strategy? Well, it all comes down to spotting one very specific pattern. The pattern he hunts for is called an accumulation phase. This is when a stock just goes to sleep. It trades flat, sideways, in a boring range for weeks, sometimes even months. To most people, it looks like nothing is happening. But Mitesh believes that behind the scenes, the big players are quietly buying up shares.
It's like they're coiling a giant spring, getting it tighter and tighter, just waiting for the right moment to let it explode.
And take a look at this chart. It's a perfect example. See this long, flat period? That's the accumulation. Boring, right? Then, boom, it just explodes out of that range. And here's the key, the confirmation. Look at that massive spike in volume at the bottom. To him, that's the signal flare. It says the big shots are done buying quietly, and now they're ready to push this thing higher. That's his entry signal.
So you can basically break his whole method down into 4 simple steps. Step 1, find a stock that's been going sideways for a while. Step 2, and this is the hard part, be patient. Just wait for it to finally break out of that boring range. Step 3, and this is absolutely crucial, confirm that breakout with a huge spike in volume. If there's no volume, it might be a fake out. And step 4, only after all that, you pull the trigger and execute the trade.
All right, so knowing the strategy, that's one thing. But as they say, knowing is only half the battle. Actually doing it, managing your risk, and having the right headspace, well, that's a whole other ballgame.
So when it comes to how he executes, he's a big fan of selling options, not trading futures. And why is that? Well, it all goes back to those painful memories. With futures, you're on the hook from the very first cent a trade goes against you. It's instant pain. But when you sell an option, you get these built-in buffers. The strike price gives you a cushion, some room for error. And the best part, time itself is on your side. That time decay thing actually helps you.
You know, Mitesh has this great term he uses, execution power. And here's what he means. So many people can look at a chart and go, yep, that's a breakout. They know what to do. But having the knowledge and having the guts to actually click the mouse and put your money on the line when the moment comes, those are two different things. That second part, that's execution power.
And really, his whole success is built on this mindset. It's all about developing that execution power. It's about finding one setup that works, like these breakouts, and just sticking to it instead of chasing every shiny new strategy. It's about having the discipline to wait for your perfect pitch, defining your risk before you even get in, and most importantly, letting your system, not your fear or greed, tell you when it's time to get out.
There's this quote from him that I think just says it all. He's a pretty soft-spoken guy, right? But he says his trading strategy is the complete opposite. It's aggressive. And that's so true. He's patient, he waits, he analyzes, but the second his setup lines up and that volume confirms it, he pounces. No hesitation. It's all action.
And that really brings us to the big takeaway here, doesn't it? When you look at his journey from just chaos and losses to this super methodical strategy, you have to wonder, maybe the real secret to this whole trading thing isn't about having a crystal ball to predict the future. Maybe it's just about having a solid plan, the discipline to stick to it, and the courage to act when your moment finally arrives.